Well, as long as we're talking about that going into the weekend, I think we're going to have closes like this going forward. I talked to a bunch of portfolio managers this week and this morning, and the first half of every conversation is about the humanitarian devastation that's going on. We didn't even talk about stocks in the market. So that tells you what's weighing on the investor psychology. And I think as this now longer war drags out, the thing we haven't even mentioned is, for a lot of people, this is the 2-year anniversary of COVID starting. It was that Friday the 13th, 2020. So we've got 2 full years of that. And we wondered what would take that off the front page of all the papers. And unfortunately, it's the war. And that doesn't make us feel any better. And that's why we're making fresh lows and closing on lows today.
And Mark, I mean, you and your firm focus on the growth stock areas. That's another really storyline here. It's almost, I mean, it's related to COVID, but just the fact that we keep kind of grinding lower in a lot of those hyper growth names. They got inflated in their valuations. You sort of think they've gotten discounted enough, and then maybe not. Obviously, DocuSign's an example today. But in terms of talking to clients, I mean, are they yet sort of turning their back on this whole category? And how do you kind of counter all this negativity? I mean, there were probably just a couple hundred too many of these stocks came public in retrospect.
Mike, that's a great point. And I think it's really hard to turn your back on technology. I mean, we think of technology more as a horizontal than a vertical, because so much of technology overlays everything we do, whether it's in consumer or whether it's in financial services or financial technology. But yes, the market had a lot of capacity, took in a lot of stocks last year, and now they're digesting that kind of valuation. Hard to turn your backs. I mean, you see some things like we saw in CrowdStrike this week, like we saw with the investment that Hellman Friedman made in Splunk last week. And remember that tech pessimism is kind of quick, but then we have a short memory. I mean, we looked 6 years ago, we had that Tableau LinkedIn Friday where both stocks got decimated, and quickly we had some M&A activity. I still think that's going to happen, but when you have reminders like DocuSign and kind of the performance on the downside, it's really painful for investors. That being said, I'm an optimist, because I always say the alternative is far worse. And I think technology continues to be the bread and butter of our economy, and innovation isn't slowing down. But right now, it just feels very, very dire for some people. And when you see DocuSign's kind of performance today, it doesn't make you feel good.
Well, I mean, you sound like Cathie Wood there. The ARK Innovation ETF is down more than 7% for the week. It had a big down day today, about 6% down day. It's now 60% off its highs, versus the NASDAQ Composite, which is down about 3.5% for the week. So where would you be looking then, Mark, to buy if you still see these as big winners? Well,
saying I sound like Cathie Wood I'll take that one through the weekend and digest that myself. But listen, the bigger they are, the harder they fall, right? I think some of the, if you looked at the components of what was in the fund up till now, it's kind of a who's who of what's gone wrong in the market in 2022. I think there's ample opportunities here in technology, because you see these things like we saw in CrowdStrike this week. That just have opportunities to the upside. I think people are going to take fresh looks at companies like Snowflake, which obviously had a bad performance in the last week or so, and that move to the cloud and then move to your own cloud has not slowed down. You look at C3AI, which is a company that has treaded water here for a couple quarters now, and the move to AI has not slowed down at all. I think investors have to dust off those names and find opportunities, because as quick as they've fallen and as far as they've fallen, I think as a part of our lives, that's not going to change. Fintech, payments. I mean, sure, these stocks have gotten to lofty valuations, but to think that part of our economy is going to just go away because stocks have fallen, it's just not going to happen. So I think it gives people a fresh perspective. The capital markets are clearly shut down for some time, so they're not going to have new. I mean, I talked to this portfolio manager this morning. He's like, my calendar's clear. I haven't seen an IPO this quarter. That's not great for Wall Street revenues, but it's great for portfolio managers to dig into companies that are great, that are going to turn around. We saw 20 years ago the cover of Barron's and said Amazon.com. Facebook went down 50% out of the chute the first couple quarters. Innovation doesn't die. It just takes a time out, and that's what we're seeing, I think, Sarah, right now.